Welcome to Markets Now. I'm Rochelle Rook along with Chuck Shelby, Risk Management Commodities. A mostly lower day in grain and livestock futures trade. Feeder cattle probably the one exception. But Chuck, I want to talk about corn and wheat. How much of today was just some consolidation within these trading ranges that we're in?
It seems to be that these markets are just really stuck. It might be good if you're a day trader because we go to the upper end of the range and then we go to the lower end of the range, but we're not really making any progress at getting out of the ranges. I guess the good news from a producer standpoint is we're holding these levels and maintaining them, but frustrating to some the guys holding corn or beans that we can't get a rally going to where they want to sell.
Yeah, no doubt. And in the case of the corn market, we really need some export demand. Weekly exports this morning were better, but we're still, 41% behind on our annual pace. And so can we get caught up?
Well, we really need to see some really big numbers, and with the Chinese could be someone who could come in and make that happen. But so far, they've been going to South America, Brazil to buy. So I think it's really critical in the next 2 to 3 weeks if we want to see this market break out and move to the upside that we see world buyers step up, and it's got to be pretty big to make that happen.
You bet. What about the wheat market? We set back and I said, some profit taking there. Kansas City wheat can't seem to get above that $9 mark or at least close above it. But we also have some moisture moving in some areas, don't we?
Yeah, I think that's helpful, but as we go into the month of March, we'll probably be able to have a little better handle on how that crop's going to come out of this dry conditions. But same situation there. We're stuck. Get the upper end of the range. We really need those world buyers to step up. Wheat exports haven't been very good. So that's the catalyst to higher prices as we move into the next few weeks.
Yeah, wheat exports were not good on the weekly report here. And Russia is just kind of pushing us out of the market, or where are we getting that competition?
Yeah, I think it's partially what's going on over there. There is some concern maybe that going forward, about a month from now, Russia renegotiates how much grain they're going to let out. I know India is putting some export restrictions on their wheat, so maybe there's some catalyst here for a springtime rally in wheat. But right now, again, we're just stuck in the mud, and we go up a little bit, and then we go down a little bit, and we just don't make any progress to the upside.
Yeah, it'll be interesting to see what we can do going forward. Okay, soybeans. We ended about flat here on the nearby contract, but you had meal screaming higher, oil going the opposite direction, and soybeans kind of got stuck in the middle, right?
Yeah, we had a good overnight trade. Beans were higher. Then we drifted lower when we saw those export numbers come out. We saw the meal market take off, though, and that was a positive, but some spread unwinding probably with the oil. But again, if we got one of those markets screaming higher and meal continues to be strong, it should help the soybean market too. But again, the old news out of South America, Argentina is not going to do too well. It's kind of drying up and hot again. But how much of that have we built into the market? Is there any more left with the weather market, or have we run the course on South American weather?
Yeah, I was going to ask you that if we had run our course on that, putting risk premium or weather premium into the meal market, because we got above 500, we got up to contract highs, and we've reversed off those areas. So will we go retest those?
Well, I think the USDA report did reduce the Argentinian crop. There's those out there that think that's still going to be reduced another time in the upcoming March report. So we're kind of stuck in the middle here again. It's not good down there, but $500 meal is pretty pricey. And I think it's going to be a tough, difficult to get above there without some enthusiastic sales. Or if the funds want to continue to add on in meal, that could be another catalyst to drive it higher.
Very true. Are we starting the acreage battle, or when will we?
Well, that's an interesting question as we move forward. There's some private people starting to put out numbers. At the end of the month, the USDA will give their projections. Yeah, I think one of the interesting things we've seen is the decline in some nitrogen prices in our part of the world here in the Eastern Corn Belt. Curious to know, is that because the demand for nitrogen is down because corn acres aren't going to be as big as some think, or is it just the fact that producers are holding on, waiting to buy, and will that stimulate more acres? That's going to be something that we're going to be interested to find out, but it's March 31st when we got a long time away.
Well, something to watch for sure. Cattle market. Also, we had live cattle mostly lower on the day, and it seems like we're just kind of consolidating under these contract highs until we get what, cash news to push us, or what?
Yeah, it's a solid market. It's a high price market. I think the thing going forward for cattle is as we get into the springtime, that's cookout season. That's increased demand is going to come. So far, the consumers are still spending money on beef, which is a positive. So I look at that market as pretty solid market going forward. But just like all markets, you're going to have days when it backs off these record highs. And I think it's a strong market going forward as we move into March.
And hogs, a down day despite a little bit better cash and cutout values, and cash looks like it's bottomed here, so why lower?
I think the money flow is still negative on the hogs. We're down in an area we should find support. It should be oversold enough that we start to bounce it here. But just a market that struggles here when you have money flow pushing on it. But again, as we go forward, I think there is some demand at these kind of price levels that should be able to perk that hog market up a little bit too.
All right, let's hope we can get this bottom put in. Thanks so much for joining us. Chuck Shelby, Risk Management Commodities with Markets Now.